All right, so I want to thank everybody today whoever's in attendance. Good evening, good afternoon, depending on what time range or time zone you're in. We have a special one for you planned today. We have Grow and Preserve Wealth Without Counterparty Risk, which is more important now than ever before, with our special guest, Chris Blasi of Neptune Global. I want to let you know that I'm just going to do a quick disclosure, introduce myself, and then I'll introduce and pass over the keys to Chris. Just want to let you know we're going to be saving questions for the end of the presentation. If you notice, there will be a Q&A function on your end where you can put any questions that come to mind. It won't interrupt the webinar, and we'll be able to read them at the end and give you your answers. So without further ado, we'll start off with our disclosure. At Camaplan, we just want to let you know that we don't endorse anybody. Always do your due diligence. We're not licensed attorneys or CPAs or financial advisors, so we can't give any investment advice in those fields. So again, always do your due diligence. If you need to speak with anybody about these questions, about your self-directed IRA, we can definitely jump on the line with you and any of your investment or your financial professionals. We'd be more than happy to help. My name is for some reason it's not showing the, sorry, there we go. This is the disclosure, my bad. It's late, it's been a long day. This is the disclosure I was just going over. This is just showing you again, we're not lawyers, attorneys, or CPAs. I won't go over it again. But now that we're up to speed, I can introduce myself. My name's William Mucker. I'm a client executive with Camaplan. I help answer questions about self-directed IRAs, the entire process, and help people get started. So if you have any questions on what Chris mentions today or presents today that applies to self-directed IRAs, feel free to use this information here to reach out to me, either wmucker@camaplan.com or info@camaplan.com. You can always call into our office. I'll be more than happy to speak to any and every one of you. And if you mention to me, if you call and reach out to me or somebody in the office and let us know that you've been on today's webinar, we're going to be waiving the $50 application fee for new and existing clients, families, and friends who want to get started with self-directed IRAs. So without further ado, I'll stop yapping on and I'll introduce our special guest, Chris, today. Most investors are unaware that gold and precious metals have been delivering outsized gains for years versus stocks, bonds, and real estate. Chris will show to you how investors who position themselves in physical bullion are eliminating risk associated with other avenues of investments. Chris has over 30 years of experience in finance and technology. He's also the creator and holder of a patent for PMC ounce, which is a precious metals composite. He's contributed to major publications such as the Wall Street Journal, Investors Business Daily, MarketWatch, The Street, USA Today, and CNBC. So without further ado, I'm going to pass the keys over to our special guest, and he'll tell you more about himself and the wonderful things he has to teach to you. All right, Chris, you have the keys. It's your show. You can share your screen and you can unmute yourself and start presenting. Hey, Chris, just to let you know, you're still muted and we can't hear you on our end.
Can you hear me now?
Yes, sir. You're all good.
Okay, I'm sorry, everyone. So let me just back up a little. My name is Chris Blasi from Neptune Global, and I'm going to be talking about precious metals tonight. Some of you have worked with Neptune Global and have some experience in precious metals. Some of you are new to precious metals, and I think that you're just here to, learn more about them and where it makes sense in a portfolio. And what we're focusing on tonight is, as Will said, we're going to look at a very important element of precious metals, and that is why precious metals in physical form do not have the counterparty risk virtually every other investment asset has, and why that needs to be really embraced and become part of your portfolio based on what's happening in the world around us. Now, first, just a little background. We're headquartered in Wilmington, Delaware. We're established in 2002, so we have a long track record. And we're a full-service precious metals dealer, dealing all forms of bars and coins, and always physical bullion. And as Will said, we are the developer of the PMC ounce. I just want to make clear, we are not financial advisors. We are a dealer. We will share our opinions on things and share data, but of course, you know, it's your job to analyze this data and to do your due diligence. So we're not here as investment advisors, but as just a dealer with information and knowledge in this market that we will share with you for your, hopefully, for your consideration. Now, I'm going to start off in a non-traditional way, and I'm going to show why we're having this meeting tonight. Now, this chart was from showing the returns of the PMC ounce, gold and silver, at our last Gamma Plan webinar, which was in March. And this was showing the historical return going since the creation of the PMC ounce. Now, granted, we deal in all forms of gold. The PMC ounce is a particular winner, which many of our clients and Gamma Plan precious metals investors have embraced. And what this chart shows you that since 2009, the PMC ounce delivered a return of 121%, gold 95%, and 38% for silver. And this is why I believe everyone's on this call. I believe everyone knows that precious metals are performing well. I don't think they may not be fully cognizant of how well they're doing, and maybe they don't fully understand that extra value it has as far as eliminating counterparty risk. But this is why we're here tonight, because of returns, because of what an asset can do for you. Now, again, this chart shows you where the metals were at our last webinar in March, which was roughly 7 months ago. Why are we? Okay. Now, at that time, I showed you this chart too. And this showed you, and I was talking about how gold, which is, we'll use it as the proxy for the precious metals, entered a secular bull market in 2001, 2002, roughly. And just so you know, a secular bull market is a long-term market that runs generally 20 to 25 plus years. And it has 3 legs to it. And that first leg we already went through from the start, which again was around 2001, 2002, until 2011. Then all secular bull markets have a consolidation pullback period, which is leg 2, which we went through and culminated in December of 2015. And since that time, precious metals, and as shown by gold, has been climbing higher. So we are in the 3rd leg. Now, you should not feel like you missed the boat. Just so you know, the 3rd legs of secular markets are the biggest, most robust gains, and the highs will be much higher than the highs achieved in the first leg. So again, this was the state of things 7 months ago at our last Gamma webinar. So where have we gone since then? Well, here's that chart I showed you before, but now extended to as of yesterday's close. If you look at the red, the PMC ounce has now delivered 172% since 2009 versus what it was back in March, 121. Silver 130 versus 38, and gold 123. So my point is this: if anyone was back there and people get nervous and they see a little bit of pullback in gold and they bail, and realize some people will reduce their precious metals position because realize your financial planner, your wealth advisor, and the mainstream financial media does not promote precious metals. They're always trying to dissuade you. But as you can see, those that either entered the market at that time, added to their positions, or just continued to maintain their position have been rewarded. So again, this is to support the premise that we are in a long-term market. Any pullbacks at this time are most likely just temporary in nature and provide an opportunity for investors. Again, here's a update of that chart showing the secular bull market. This is now as of yesterday's close. Again, the picture's the same, but see that green arrow? That's where gold was at the last CAMA webinar. And you can see it's much higher since then. Again, I hope this helps to reinforce that we are in a secular bull market from our perspective and the perspective of many well-respected analysts with an open mind, really, who accept all asset classes, not just promoting stocks or bonds or something else. So again, the chart is supporting the position that Neptune Global has made. And for those who are long-term clients, you would know that back in 2006 and 7 and 8, when we were still in leg one, our opinion was that we are in a secular bull market and a pattern such as what you're seeing right now would be playing out. So let's just look at one important thing. If your financial advisor or the mainstream media is downplaying or really is tepid about going into gold, realize that the central banks of the world have been on a gold buying spree. So here's an excerpt or the headline from a Bloomberg article back in 2019, affirming how the central banks of the world are buying gold. So that should be very important to you. That is much more telling than what a financial advisor or certified financial planner who has an unfortunate vested interest in putting you in products that they're selling or that they've just been trained to promote, okay? And so these are the guys that control the money of the world. And notice, central banks do not use stocks as an asset. They don't buy real estate. They're putting precious metals, or gold really, because they only deal in gold, as a reserve asset. So I'm a believer in the guys who are at the table who are controlling things, do what they do, not what CNBC tells you to do, or someone who may not have a fully, or who has a vested interest in maybe you not being in gold. Now here's a picture that's really important. And this is the price of gold versus the Fed's balance sheet, right? And I think we know what that is. And the Fed's balance sheet is represented by the blue line. Gold is the orangey line. As you can see, there's a correlation. And in 2014 through 18, or actually 2019, you can see gold was just trending sideways because the Fed's balance sheet was trending sideways. And this is when the Fed talked about reducing their balance sheet. But what has happened, especially since coronavirus? The Fed's balance sheet is growing exponentially, and now gold is starting to pick up steam. So you can see this correlation. Now, if the Fed's balance sheet is growing exponentially and gold is following it up, that gives you a pretty good indication of where gold and precious metals are probably going. And we know the Fed is not finished because the money printing, because of coronavirus, is going to continue. It's not a matter of if they're going to print more money and distribute it. It's really a matter of how much and how often. I mean, we know right now Congress is battling about how many additional trillions of dollars. So that, according to a chart like this, and it's common knowledge, is a strong driver for the price of gold, much more than other assets that are maybe in your portfolio. So the point is, this isn't about gold or the other assets, but this is just to make the point that gold needs, and precious metals should be part of your portfolio, and it should at least represent a material enough part where it can benefit you, which is kind of hopefully a preemptive answer to a question of how much should I have in my portfolio? So let's look at signs of a market top. So someone says, okay, gold and precious metals, silver, they've all gone up. Maybe it's the top. Well, let's look at some of these historic markers of a top and how does it apply to some of the major asset classes. Okay, point one, the mainstream media is persistently bullish on an asset. Well, they never stop with stocks, no matter how high the PE ratios get, how overbought a stock will be. They are persistently bullish on it. And real estate is a major component of our whole economy. and that is true. So there is always a persistently bullish message that real estate is always the time to buy. How is that for precious metals? Not so. There is no persistently bullish table pounding that you need to have precious metals and just buy as much as you can by the mainstream. So that, again, that bodes better for precious metals than the other major asset classes. Point two, wealth managers and your certified financial planners or whatever you want to call them are promoting the asset. They're not promoting precious metals. So again, there is no way based on a action like that precious metals are overbought. Now, the same can't be said for stocks, bonds which are basically yielding nothing, that people continue to go in, they are probably more likely in a top. Point number three, despite a clear market change, investors continue to stick to an old playbook. That is, again, investors are still not fully embracing precious metals in a meaningful way, even though they are going up and the investor audience is expanding. There is no way that is the playbook for most investors. Most investors continue just to myopically say it's always got to be stocks. And in all honesty, real estate. Okay, real estate is historically a great investment, but we are in completely different times right now. Now, granted, there's certain markets like northern New Jersey where people who are fleeing Manhattan are going to, and people can make the case that real estate is doing great, but it's a zero-sum game. I mean, right now, it's just people leaving a Manhattan property to go into a northern New Jersey property, or maybe for someone in a center city heading out to Bucks County. So it's not a across-the-board opportunity. And actually, in a lot of the properties are being bid up in the area where people are going, which means if you're buying it for an investment property, maybe a little high priced. And never mind that there's also the issue with people not paying their rent because of the financial trouble they're in right now. Next point, every negative is an opportunity. Again, that's what, doesn't matter what negative comes out about the stock market or a particular company that is represented on the stock market. It's always a buying opportunity. Same is being said for real estate, not so with precious metals. If the mainstream media can latch on to any negative about precious metals, they love to bring that out to, again, to dissuade you from being in it. And another market top signal is that positive drivers are relying more and more on gimmicks, that it's not really fundamentals that support it. What could be better than the stock market and stock buybacks? When companies borrow money to buy their own stock to drive the price up, that is a pure gimmick. It's actually fraud. So you have stock prices going up, not because the business is getting better, but because this company is competing and buying their own stock to drive up the price. And actually, they do that to compensate the executives. Unfortunately, our regulators let that go because of vested interests, but that is worse than a gimmick. It's fraud. And, let's look at historically with real estate, 2006, 7, and 8. When real estate crashed in 2009, what was more gimmicky than a ninja mortgage? Giving a mortgage to a person who can't prove or maybe didn't even have any income or not enough income to afford the property. That was a straight out gimmick that was officially sanctioned. None of that exists for precious metals. So it's all supported by hardcore fundamentals, no gimmicks. Now, just in case, to help drive the point home that the mainstream media has basically truly an agenda and they're not telling you the truth, this is gold versus the Dow Jones, right? One of the stalwarts, one of the bellwether indexes to show performance. This is 20 years. So it's not like we're pulling out and saying gold versus, stocks for the last 1 year or 2 years or 3 years. This is 20 years. So in the last 20 years, gold is up 605%. The Dow Jones Industrial Average up 161. Now, with that fact in front of you, can you honestly say the mainstream financial media is honest? Did you hear about this? Have they been pounding the table? Not at all. So this is where, and I congratulate you for coming out and doing your own homework, But this is information you will only find by doing your own research as you're doing tonight and as we're sharing with you. And you can go to Macro Trends. It's it's on the web. It's a free site. They post, they make all this data easily available. So why own gold and precious metals? Okay, real simple. It has always been a store of wealth. All paper money devalues and ultimately fails. And just so you know, the dollar has been devaluing. It's called inflation. We've had inflation our whole lives. We've had inflation and devaluation of the dollar since the creation of the Federal Reserve in 1913. Most people are tricked to believe that inflation is good because they say my house went up in price. At the end of the day, inflation just takes away from you. Except for the ultra high net worth, for most people, inflation is really way worse than and does not offset, or the gains they make in their assets do not offset the losses they're really realizing through inflation. The value proposition for gold is not to be confused with other investments. You hear this all the time. Oh, gold doesn't have a yield. Well, it's not supposed to have a yield. And that's a good reason, believe it or not, because that's where the counterparty risk comes in, and we'll talk about that in a little bit. I'll tell you right now, the role for precious metals and gold now is more important now than in the past 100 years. It's because the currency is being aggressively devalued and destroyed by the Fed. We have a sea change going on, which was actually happening before, but the pandemic right now is just accelerating those changes. It's completely changing the complex of real estate, especially with the work from home. And now companies are embracing work from home as a permanent thing for many of their employees. Of course, the ramifications for commercial real estate is going to be monumental. And the bottom line is, you have to be aware, as I said before, the beneficiaries of our current system do not want you to protect yourself with gold and precious metals. But just remember, the central banks of the world continue to buy it aggressively to protect themselves. So why are precious metals unique? Liquidity. Precious metals can be bought and sold at any time. So it has tremendous liquidity. Stocks have liquidity. Real estate, not so much. I mean, granted, if you buy a REIT, it does. But, and again, this is not saying one is better than the other, but it's to drive home the point of why you need truly diversified positions in a portfolio. So real estate is not liquid, right? We know that. Next thing is portability. Real estate is not portable. Precious metals are portable, right? They can move around. You don't have to worry about geographic risk. The stocks themselves are portable, but the business may not be portable. Some are, some aren't. Divisibility. Precious metals are highly divisible, right? If you buy like silver, it's divisible by a $24, $25 ounce. Real estate, not so divisible when you actually buy the physical real estate. Of course, you can buy a REIT. That's a little bit different. Stocks are divisible, but gold, precious metals are highly divisible. Gold has been globally accepted and held value for 5,000 years. There are no businesses from 5,000 years ago. Stocks, all companies have a limited life. They really do. There are very few companies that are around 100 years ago that are still of any value anymore. So keep in mind, they're always moving targets. Real estate, obviously been around for 5,000 years, but there is location errors. 100 years ago, since this is an audience with probably a lot of familiarity with Philadelphia, there were sections of Philadelphia that 100 years ago that are not worth much today. That happens all the time. So, again, that doesn't affect precious metals. And the last point, no counterparty risk, which is our main theme tonight, which is what we'll go into a little bit right now. So what is counterparty risk? This is the official definition. Counterparty risk is the likelihood or probability that one of those involved in a transaction might default on its contractual obligation. Counterparty risk can exist in credit, investment, and trading transactions. Okay, so what does that mean? Let's look at real estate. Counterparty risk, one of those involved in the transaction, your tenant. The counterparty risk is he can't pay his rent. That's risk. If he stops paying his rent, you are now probably in a losing position. and now you have to, do something to make it, to make that whole. But you'll incur a risk or a loss that you won't be able to recapture. There's other counterparty risk with real estate, changing trends, a location changing, falling out of favor, a section of a town or a city falling out of favor, and that property now being negatively affected by that. Taxation, you have no, it's not portable. So you take a city like New York, which has been taxing their businesses to death. And I know I have clients and friends who owned businesses in New York who before the coronavirus were getting driven out of business by taxes and regulation. That's counterparty risk. Stocks have plenty of counterparty risk. A stock is a claim or ownership position in a company. A company is an operating entity. All the counterparty risk falls under, will that company be competitive with their products or services? Is the management competent? Is the management trustworthy? So if they fall down on their contractual obligation to run the company in an ethical way, to constantly bring products or services that are marketable to the public, and on and on and on, those are your counterparty risks. Bonds, like real estate, the person you're lending the money to, are they a good credit risk, right? That's why they rate bonds, because of credit risk. When you own the actual physical precious metals, and I don't mean by saying a derivative, I'm talking about the actual physical metal, which is what Neptune Global deals in, there is no counterparty risk. It is what it is. So you take an ounce of gold. An ounce of gold is an ounce of gold. There's a market price that's changing, how many dollars, yen, ruble, whatever, yuan, euro, for that ounce of gold, but no one has to do anything for that to stay an ounce of gold, right? You're not counting on income, right? That's why I said when people will denigrate and say, well, gold has no yield, well, that's right, but it has none of the counterparty risk that goes with the yield. If that yield is not being paid, it kind of makes that investment worthless. So that's why precious metals has no counterparty risk. And here's just a chart. And this is what I'm making the point that as part of a portfolio, you want to incorporate something like gold and precious metals because it doesn't have counterparty risk as one of its, real benefits versus all these other assets that may be in your portfolio, which do have counterparty risk. So let's just quickly go through them. I talk about stocks, and they can be in regular shares, ETFs, or mutual funds. They have counterparty risk. They're operating entities, or they represent, like a mutual fund, a collection of operating entities. Bonds, notes, and fixed income funds, yes. Anytime it's a debt-based, debt has counterparty risk. The person who you lent the money to has to be good for making payments, and that's your risk. Real estate and REITs, we talked about real estate. Look at mall properties, right? Because of coronavirus, tenants aren't paying. Tenants aren't paying rent. And we'll get into some of that and how those non-rental payments are actually being allowed and sanctioned by the government, which is unheard of. Now, the reason I'm throwing mining shares in here, some people may confuse and say, well, I'll buy precious metals, I'll buy mining shares. Or their wealth advisor says, well, don't buy actual gold or silver, buy mining shares because they can sell the shares. Mining shares are operating companies. They are not the same as owning physical metals. I'll just go back to something as simple as central banks use gold as a reserve asset. They don't use mining shares, right? And that's as simple as that. And mining companies have all sorts of risk because they're operating companies. Next, point number 5, gold and silver ETFs and other derivatives. Not all ETFs are created equal, but they all have exchange risk. Some ETFs are just loaded with derivatives, especially the two biggest, whose symbols are GLD and SLV. And then, of course, there's other derivatives like futures and options. All those proxies for precious metals are loaded with counterparty risk. The physical metal itself, which you can own and hold in an IRA or outside of an IRA, but within your IRA, the actual physical metal does not have the counterparty risk associated with all those other common assets. And that, in these times right now, with what's transpiring, macroeconomically, geopolitically, culturally, economically, what's going on with our central banks, that characteristic is more important than ever. Now, this is just a couple headlines that probably some of you are aware. And the reason I talk about real estate a lot is, look, I understand a lot of self-directed IRA customers are started as all real estate. And real estate is great, but precious metals, in my opinion, based on what's happening, are where you need to or where you want to put more of your assets. So here's a article, and this is just from a couple days ago. Las Vegas tops the U.S. in rise in apartment tenants not paying rent. Okay, as of September, Las Vegas rents, the people who are not paying are up to 10.6% from 4% a year ago. Now they're just leading the nation. This is common across the country. Again, that's counterparty risk. So even if you buy into a fund that owns apartment buildings, there's a lot of tenants not paying rent. That's going to be a problem. And here's why that problem is particularly scary. Many of you may be aware. The government is actually coming in and telling people they don't have to pay their rent. Imagine an agency like the CDC. We're not even talking the Treasury. The CDC telling people that they can't evict people for not paying rent. Many of you should be aware, especially if you're in real estate, this is new. This is unheard of. No one's challenging it in court, but it's happening. So this is the type of counterparty risk, especially in these changing times, I think you want to preserve and get away from, or at least get an asset that doesn't have such risk. Now, just as a reminder, this is where the metals are. We're not going to talk about particular products. The PMC ounce is a particular product we have, which is a blended return of gold, silver, platinum, palladium. It gives a better risk-adjusted return than gold or silver. I also want to just talk to you about a common mistake a lot of investors make. And I've seen this. I've seen investors who bought gold and silver several years ago, made a big return, and cashed it all in. I don't know where they're going to go. I mean, they're going to go, do they think that now's the time to go into the real estate market, or they're going to go into the stock market? And the reason I know this happens is, and I learned this way back in my early years working at Merrill Lynch, many investors make this fundamental mistake of selling their winners and holding on to their losers. Now, when it comes to stocks, this is what is very common with people. They buy 5 stocks. 3 go up, 2 go down. They sell their 3 winners because they got a gain, and they hold on to their 2 losers because they don't want to sell until it gets back to where they bought it. They lose sight of the fact you don't fall in love with the individual stock. You should be selling the losers and investing in another winner. But they just, for some psychological reason, don't want to sell any stock at a loss. They don't look at it as the portfolio in its whole. So you can see where this is going. They sell the 3 winners, hold on to the 3 losers, buy 3 new stocks. 1 goes up, 2 goes down. Sell the 1 winner, hold on to the loser. You see where this is going. They would say they end up with a basket of losers. So right now, especially because precious metals you're not patted on the back, and there's no cheerleaders in the mainstream financial media. Some people panic. Well, maybe their gold didn't go up right away, like within a month, or they made a gain and they're scared, so they're just going to cash in. I wouldn't suggest to you that you really look at the fundamentals supporting gold and other assets. And and I believe that we're still in the early stages of the 3rd leg of this secular bull market, and some of the biggest gains are in front of us. So don't get scared out of your position. Don't look for the mainstream media to pat you on the back and cheerlead and tell you to keep buying gold and silver. Unfortunately, it's a position and something you have to do on your own. And just for those who are interested in something like the PMC ounce, this was highly recommended by a very knowledgeable analyst, Jim Rickards. And we've heard from clients of his and from his organization itself that of all the investment recommendations they made, the PMC ounce has been one of their best. So I want to open up to questions right now. Not sure how we get to that.
If you like, Chris, I can field the questions for you.
Okay.
it doesn't look like anybody has used the question and answer function yet. But I guess I can start you off with a question while people start typing into the field now.
Sure.
So, Chris, in the times we are now, to offset these risks increasingly, I know a lot of people say that you should have a certain percentage of your portfolio, whether it be retirement or your just your personal investment portfolio, to be precious metals for a good diversification. Do you think that percentage has gone up, and if so, how much more should you be putting into precious metals?
Sure. So this is a question we always get. And guys like Jim Rickers, all of them will say the same thing, and they just do it to cover themselves, right? They'll say, okay, 15%, 10, 15%. That's just a textbook, right? And I'm going to give you the answer that we'll all get, right? They give that because they just say, look, just spread your portfolio out, right? 10% in this, 10% that, 10% in, something else. I'll give you my opinion. This is just my opinion. You can diversify a portfolio to the point of you go nowhere, where everything just offsets. For every asset that goes up, one goes down. Think about that, right? If you take diversification to that degree, what's the point? You might as well just buy a money market fund, right? Because you're just buying and selling assets and they're all offsetting each other. Gotcha. What I believe you will find with the most successful investors, they overweight an asset that's going to be going up, that their homework, their due diligence is going to go up. That's the only way to really get ahead. So I'm not going to give any percentages because I need to take the same conservative approach, but I think investors need to think it through. And I will just say this, your position in the metals should at least be material enough that it, like the way it's gone up for the last 20 years versus the Dow, that position was meaningful and was able to truly help your portfolio. I mean, if a person has 3% in precious metals and 97% in, stocks and bonds and maybe real estate, and the real estate is trending downward, or where now a renter's not paying their rent and the stocks, go down or just tread sideways, and gold goes up, well, that's gold. Great that the gold went up, but is 3% enough to really materially help you? I'm not going to answer that question. I think everyone on our audience is pretty smart and they can figure that out for themselves. So that's my answer. It needs to be at least material enough that it's going to benefit you.
Great answer.
And just, a couple people did email Neptune Global during the day about questions for tonight. So, if any come in, that's great, but I'll make sure I cover them.
Okay. Before we do that, if you don't mind, if you can see me, if you can hit more on the panelist section and make me host, I'm going to just put up your bio while you answer the question, so we have something in the background.
Okay, I clicked more, and what do you want me to?
Make host, I believe it is.
Okay. Nope, that's not what's coming up.
If you can't find it, no worries. We did have a question come in as well. Do you want to start with the live question, or did you want to do your?
Sure. Yeah, no, we'll do the live ones first, then I'll get to the other ones. Sounds
great. So Delbert asks, what protects me from government confiscation as a result of government spending on COVID? And a Biden win with a possible raise on taxes.
Okay, so a raise in taxes would not have anything to do with confiscation or COVID. And we get this all the time. And a lot of unscrupulous dealers use this as a ploy to move people into things like numismatic coins and non-bullion coins. And this is the talk track. In 1932 or 33, Roosevelt called in the gold. Okay, well, so it's true. In 1932 and 33, they asked people to turn their gold in. And let's look at 1932 and 1933. In that era, the United States was on the gold standard. The United States could not print more money without gold to back it up. We were in the middle of the Depression, and they wanted to print money to pump into the economy. So they needed gold. So they were getting it from any source they could, and they asked people to turn the gold in. Now, we got off the gold standard for a specific reason. Politicians and government can't just print money when you're on a gold standard. They hate the gold standard. So the government, as we know, like we looked at the Fed's balance sheet, trillions and trillions going into the economy, they don't have to have gold backing it up. So my point is, the whole reason for calling in gold in 1932 does not exist today. We're not on a gold standard. The government doesn't want to put handcuffs on itself. If they did, they can't print $1 trillion. There isn't at today's prices, there isn't $1 trillion worth of gold available. So the point is, unfortunately, dealers will do that to scare people. And, you know, they say, oh, the government's going to confiscate my gold. I better buy numismatic coins or non-bullion. So my premise is, it's a really underhanded thing to say. If you think politicians want to go back on the gold standard, they're not I will disagree with you. They do not want to be handcuffed, and the public doesn't want them handcuffed. The public would not want to be told, you're not going to get bailed out anymore. And if you know what's coming down the pike, they're going to be looking for the federal government to bail out the states and all the pensions regarding, with the states. We're talking about trillions and trillions of more dollars. So they are not going to handcuff themselves to the gold standard. So I don't believe, fear of that is really well placed. I can see the questions. Number 2, what is an ideal balanced portfolio? If you're asking about other assets between equities and bonds and real estate, I can't answer that because I'm not an advisor. I could just talk to the precious metals. Again, the position needs to be material. If you're talking the difference between gold and silver, gold is still the primary that you would hold. Silver has tremendous upside, but it's a much more volatile metal. The whole reason for the PMC ounce is it's a turnkey diversified position in 4 physical precious metals: gold, silver, platinum, palladium, and they're all, and it's logically weighted. So kind of, in our opinion, it gives a better risk-adjusted return. That's been proven. And also, it takes the guesswork of you trying to figure out how much gold, how much silver. But long and the short of it is, at the end of a bull run, a secular bull run, the metals will all be up. It'll be a matter of degree. You can make that ride smoother with the PMC ounce. You can do it yourself by buying gold and silver, maybe even platinum, palladium. I think the PMC ounce is easier. But if it's just going to be gold and silver, I would weight a little more toward gold because it's used as money. Silver is a little bit different and a little bit more volatile. Next question: how easy is it to buy and sell precious metals, and how is it stored? Great question. Precious metals are very easy. They're liquid. They're actually more liquid than the stock market. They trade 24 hours a day. Through Neptune Global, you can buy or sell just on a phone call. So there is no waiting period. It's not like, hedge funds or something like that. Precious metals are stored in depositories. Some people say, well, it costs money to store metal. Well, there's a very negligible fee for insurance and storage, and it's also, like I said, insured. And that's about 0.5% per year of the value. A mutual fund is charging you 2 to 3% to manage it, far higher than the cost of storing your metal. Now, in an IRA, it has to be stored. Outside of an IRA, you can store. Most customers do store with us, but you could also have metal shipped to you and hold it on your own. Now, there's positives and negatives to that, and our bullion specialists would be happy to talk to you about that and help you make your right decision as far as that goes. Here, another question: what do you think about gold versus silver? Again, gold is used as pure money. Silver is a quasi-money industrial metal. Silver is more volatile than gold. Even if you look at the charts that I posted of the PMC ounce versus gold and silver since 2009, you see silver goes up and down much more violently than gold, even though it's trending up. So it's a rougher ride. Silver really, over the next several years, could actually have a slightly higher return than gold, and that's kind of expected by a lot of analysts. Again, that's something we could even talk to at greater length with one of our specialists. I believe they're both good. It's just a matter of degree. where's your temperament, and what is your time horizon? As a further to that individual's question, are there any other precious metals we should consider? Yes, platinum and palladium, not to the degree of gold and silver. And again, the PMC ounce incorporates a little bit of platinum and palladium, which is why the PMC ounce has the return it has, a superior risk-adjusted return. And again, we made it turnkey and easy to own all four precious metals in a completely liquid form. So liquid you can buy or sell just on a phone call. Okay, next question. Do you have an estimate for the price of gold in the next 12 months? You know, no smart person ever puts themselves down to a specific number, because I don't know. I know where the trend is. I know where it's been going for the 18 years I've been in this business. Now, whether that's going to be 2,000 or 2,500 or 3,000 in the next 12 months, I don't know. But I know that it's right now, it continues to make higher highs and higher lows. Higher lows meaning when it pulls back, it doesn't go as low as the previous time, which is the ideal way you want an asset to be moving, right? 2 steps forward, 3 steps forward, 1.5 steps back, but constantly moving forward. So I do believe it will be higher 12 months from now. I just can't give a specific number. Where do you store your precious metals? We use a non-bank depository. That's really important. Bank depositories are the big bullion banks like JP Morgan and HSBC, and they have a lot of conflicts of interest. We use a third party, a fully insured depository. You want a dealer who does not store themselves. There's a conflict of interest. We actually use one called IDS, International Depository Services, who are based out of Delaware. And again, we could talk about more specifics regarding the storage program. Our bullion specialists will be more than happy to assist you. How can you find an honest, experienced person to advise you on precious metals? That's another question that came in. I will say that the reputation for Neptune Global and our people here is sterling. Jim Rickards recommended Neptune Global in his book, a hardcover book called The New Case for Gold. He has recommended us repeatedly in his newsletter, Strategic Intelligence. Another well-known figure, Robert Kiyosaki. Anyone in real estate knows who Robert Kiyosaki is. He's also been he's a customer of Neptune Global. He's had me on his show several times, and he's recommended us. The point is, these folks recommended us because they've done business with us themselves, they're family members, and we have a long track record of doing the right thing by them and for the people that came to us through their recommendations. So I think that's a testament to how we conduct ourselves here. And I would encourage you to call, chat with our people, and get comfortable. And you make your decision if you think they're right. You will find our people will give you honest answers. They won't tell you things just to make you feel good, and they will give you all your options that you need to consider to make the best decision for yourself. And that's not just buying the metal, but it's also thinking ahead, like how are you going to liquidate? When are you going to sell? And how do you need to be positioned to sell, in the most easy way possible. Okay, I think we covered the questions. Now, I had one other that was emailed to us, and that was, how do we feel about numismatic coins? And numismatic coins, for those who don't know what that means, those are coins that have what they call a rarity aspect to them. They're not bullion coins. There may be a little gold or silver in them, but they do not trade like bullion coins. The pricing is not transparent. You pay a huge premium for the so-called rarity aspect. And I've heard nothing but horror stories of when individuals go to sell those numismatic coins, that enormous premium for the so-called numismatic characteristics somehow almost always disappears. So it's a thing that when I talked about before the confiscation, dealers will get a customer on the phone and then tell them, and oh, very smart to consider precious metals, but then scare them with the confiscation meme, and then tell them to go into numismatics because numismatics won't be confiscated. And of course, you can figure out why do these dealers do that. The premiums they make on that so-called huge premium for the rarity aspect is enormous to them. So again, that's a reason Neptune Global does not deal in numismatic coins. Most precious metals dealers do, but I think it's a testament to our honesty. We believe in the value of physical precious metals, and numismatic coins are not physical precious metals and are not bought, are not a substitute for physical precious metals. So we do not deal in them. Okay, so I just want to say, you can visit Neptune Global at neptuneglobal.com to learn more about us. Our phone number is on our website. You can even download an application from our website. You can ask us questions on our website. If you go to our website and ask a question, we'll also automatically just send you some frequently asked questions about, and it covers things like different products, storage, you name it, minimums. And again, we would also, if you want, you can call us or you can ask to have us give you a call. We're more than happy to answer your questions. We're not going to badger anybody, but we'd love to help you make a decision about, are more precious metals the right thing for you, for those that have, or should you go into the precious metals market? So, you know, again, we look forward to the opportunity to assist anybody. And we've been working with Counterplan for IRAs for, I think, at least 15 years. So we have a long track record with Counterplan when it comes to precious metals and IRAs. So unless there are any other questions, I will say I want to thank you very much. I really appreciate you coming on tonight. And again, I encourage you to further your due diligence, further your examination and research, and reach out to us and let us help you. And again, visit our website, neptuneglobal.com.
Thanks, Chris, for coming out and giving us that wealth of information as always. And I also want to thank everybody else on behalf of Counterplan for coming out. And as Chris said, please reach out to him with any questions about precious metals. Go to neptuneglobal.com. If you have any questions about self-directed IRAs or how to do some of these things that Chris mentioned, purchase and sell metals in your IRA, feel free to reach out to us at counterplan.com or give us a call at 215-283-2868. Again, thanks everybody for a terrific webinar, great questions and great answers by Chris as always. Everybody have a great night.
Thank you.